It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, December 2nd, 2015. Hope you guys are having a great week along with us here. Boy, oh boy, the volatility creeping up here. We got a couple big days ahead of us, and we got a plan for you guys tomorrow. In tonight's newsletter, crude oil is bearish with 3 great clues telling us exactly where to be looking for the best selling opportunities. The hardest part on crude is going to be after this big tumble, staying patient for a bullish correction. We're going to plan for all the oil traders tomorrow. The E-mini S&P, the E-mini, is bearish. We got a bear channel and a trading range from today's session. That means we're definitely looking for selling opportunities. But again, just like the oil, we need to see a bullish correction. Get some great areas of interest on the S&P for you guys and gals tomorrow. How about the gold? The yellow metal futures were bearish on gold this evening. A strong bear channel. Boy, they fell apart today. We get a trading range with a bearish bias this evening. It tells us to expect rotation and to let the bulls try twice to push this price higher. I get some great spots to look for some selling opportunities on gold tomorrow. And of course, the euro, the 6E is looking a little bit punch drunk. We had a bear channel down, a bull spiking channel back up. The euro looks a little bit confused after both sides took turns today. Not to be surprised, we have the highly anticipated ECB announcement tomorrow. So we're going to use it as a trading range. We got a really great plan for all you euro traders out there tomorrow. Before we jump into our charts and before we talk about our strategies for gold, euro, E-mini, and crude, I want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link right in the description of the video. It'll take you over here to the trading blog. A few important reasons. First of all, if you're not a member of School of Trade and you'd like to grab a free pass, come out and join our trade room as a guest, upper left-hand corner for that. In the lower left-hand corner, you'll see a spot to register for our nightly newsletter mailing list. All I need is your name, your email, and then make sure you check your inbox. I'm going to send you a verification email to make sure we have the right email address and to give me approval to keep sending you an email every evening when our nightly newsletter is ready. Furthermore, right below the video tonight, you can download all the charts you'll see me using in tonight's video. You can download those charts right below the video on the blog tonight. And over on the right-hand side, you can register as a trial member where you can learn all about our trading strategies. You can learn more about membership. And, of course, we've always got someone standing by 24/7, 365 to give you guys a hand. That's enough for that right now. Let's grab our charts and get ready for tomorrow. Now, before we jump into the charts, we do know we have major news tomorrow morning. Tomorrow morning, we've got major news at 8:30 a.m. from the ECB. And then we got Miss Yellen tomorrow at 10 a.m. Really, the most important thing about this is if you're a euro trader or you're a gold trader tomorrow morning, 8:30 is your sitting on hands time. It's going to get real volatile around the ECB announcement tomorrow morning. It's not on this calendar, but really any global news calendar. Tomorrow morning, we're going to hear from the ECB announcement. They're expecting for them to either commit to lowering rates further or officially announcing a lower interest rate. They're already in negative territory, so you know it's going to be a volatile session tomorrow morning early. If you're trading gold or euro, probably going to want to wait until about 8:45, 9 o'clock, see what direction we go in after that ECB announcement. Then the real challenge is going to be how the market reacts to Janet Yellen at 10 a.m. tomorrow morning. The big deal right now is that everybody's going to be listening to Janet Yellen, trying to pick apart her testimony. Remember, tomorrow's not your average day for Janet Yellen. She's going to be testifying in front of Congress. This is the semi-yearly, twice a year, right, testimony on Capitol Hill. Everyone's thinking about interest rates right now, and they're hoping she's going to say something tomorrow. She probably won't, but that doesn't mean everybody won't stop what they're doing and paying attention tomorrow. So just be aware. Once again, if you're a gold trader or a euro trader, your big threat tomorrow morning is 8:30 when the ECB announcement comes out. You're better off to sit on hands, let it move around with volatility, and then find a direction and then trade that direction. I'm going to give you some ideas tonight for gold and euro. And then really, in my opinion, the hard part's going to be what's going to happen around 10 o'clock. The market could easily, all of our markets could easily go quiet around 10 o'clock, and they may not rebound because we've got the employment situation tomorrow morning, the non-farm payrolls tomorrow. We got OPEC tomorrow as well, or I'm sorry, on Friday, excuse me. So really, in my opinion, the big variable is the early in the session tomorrow regarding the ECB announcement at 8:30. But then really afterwards, for the rest of us who are trading all the other markets tomorrow, Yellen speaking at 10 o'clock, and we may see a drop in volume, and it may not rebound until later in the day. Because again, at the end of the day tomorrow, all the smart money is going to be out of the market ahead of that non-farm payroll report on Friday. So the moral of the story is avoid the volatility tomorrow morning at 8:30 around the ECB. I would anticipate gold and euro to be most affected. I don't think the S&P and crude will be too badly affected. And then again, keep an eye on the price action tomorrow, 9:45, right, 9:50 until 10:30, 10:45. It all depends on when she stops. And again, if it gets too slow tomorrow after 10 o'clock, it's in your best interest to wrap it up and come back and trade with us on Friday morning after the non-farm pay report. What I don't want you to do is get caught trying to trade a low volume market after 10:30 tomorrow morning. So careful for volatility early in the session for euro and gold traders, and then we'll be watching this price action in real time tomorrow morning, because after Yellen speaks, they may literally close up shop and come back after the non-farm payroll. So if you need help with that, if you don't know what I'm talking about, make sure you come out and join me tomorrow morning. Our live trade room opens up at 8 a.m. Eastern time. Let's jump right in here tomorrow. Now that you know the news, let's get started here with crude. The black gold is bearish. We've got 3 great clues telling us where to look for the best selling opportunities tomorrow. But first, we need to wait for a correction. Clue number 1, we have a major bear channel on the chart. Not the prettiest channel I've ever seen in my entire career, but it definitely will work. We're rotating from the low up to the high, back down to the low, big push down to the low, and of course, we're expecting a rotation back up to the high. The bear channel tells us to sell the high, right? Channel rotation. Rotate from the high, down to the low, back to the high, back down to the low. We're definitely going to be looking for opportunities to sell up around that channel high. The second clue we see today, really I think is the biggest clue, and that's going to be this bear spike in channel. This is an inside spike in channel, which means it's actually inside that bear channel. What does a spike in channel tell us? It tells us wait for the correction. How high can the correction go? It can go to the base of that channel. We teach all of this to our students here at School of Trade. And then, of course, we know to expect after that bullish correction, the buyers will try to buy that next pullback, and we're looking for failures to sell it right back in. Third clue is the trading range. The initial trading range from today's session, take that trading range, project it down. Now we have an area of support just so conveniently placed right where price came to a screeching halt today. We know now range rotation. We go from the high to the low to the high to the low. They can't hold it going higher, so it collapses back down. Remember, when it comes to rotation, if we make it and actually touch that 39.99, which we did, now we have a new trading range to work with. Now we go up range rotation up to 40.97 before rotating back down. So as of right now, crude oil has shifted its balance from the range from 41.95 down to 40.97. The new balance range is from 40.97 to 39.99, and we expect rotation, and rotation. Now, with that said, first clue was the bear channel. That tells us to sell that high. Second clue is the bear spike in channel. That tells us to wait patiently for a bullish correction, and then make sure you're watching for those buyers, right? They're going to try to buy that next pullback. We're going to look to sell into their failure. And then again, the real useful variable right now is this new trading range, this new balance range we're in right now. So we're expecting price to try to rotate back higher. What you want to be watching for is if we're inside this trading range, scenario 1, we push up, we try again, we fail, and we collapse back down. Don't be surprised if these buyers fail If we cannot get to that rotation target at 40.97, they're going to have to do something else again because it's going to collapse back down, and it's probably going to end up shooting for that $39 a barrel area, which is that next range rotation. So remember tomorrow, sell the high of that bear channel, sell the spike in channel correction, and then use this new trading range for rotation. The key, the big one is if we cannot get to that 40.97, if the buyers can't get there, we try once, we try twice. If they can't get there, we should have no problem going back to 39.99. But really, the wise traders here are going to be looking for an attempt back at 39.01. Don't forget, we'll be trading range rotation, and we'll be watching this range rotation live in real time tomorrow. This is going to be real important here for crude. Definitely we know what the bias is. The bias is definitely down. The only question I have is what way do we go next, right? If we go lower here, try once, try twice, right, and snaps back up, it's not going to be as reliable as a trade if we go higher. Going up, try once, try twice. We need to get to that 40.97. If we don't, it's going to come collapsing right back down. If we do get to 40.97, then it's just range rotation inside this, right, inside of this new balance range. And again, sell, right, being a seller is more productive right now than being a buyer. So we'll look for the bearish bias on this to keep selling as that price goes higher. Guys, don't trade this market alone. Tomorrow morning, we'll be trading it in real time in our trade room. Moving forward here on the E-mini S&P, we're looking at a bear channel and a trading range from today's session. That tells us, the channel tells us direction, the trading range tells us rotation. And so we know right now, in this trending environment right now, we've got this bear channel coming down. Like a good channel, we rotate from the high down to the low, expecting a rotation back up to the high. We want to sell the high of that bear channel. At the same time, we also have a bearish bias to the trading range this evening. You'll notice we're behaving very well here, rotating from the low to the high, back to the low, up to the high. Now what's going to happen is those sellers are going to try to get down to that 75 half low. If they can't get there, it's going to snap higher. Where's it going to go to? It's probably going to make a run for that next range, 2091 half, 20.997, right? 29 half, 99 half. So most important thing right now is directional bias is definitely bearish. We're looking for selling opportunities up at resistance areas. Resistance area number 1 will be up at the high of this bear channel. I don't think they're going to make it that easy on us, but I definitely do expect to see this trading range be one of the most important clues here. Again, it's a bearish bias into that range. We rotate from the low up to the high, back to the low, up to the high. Range rotation says it's going to try to run down to 75 half. If it can't get there, the pendulum will swing. The buyers will see it as weakness, and it will try to get up to that 91 half. If it successfully gets up to 91 half, then just like crude oil, we go into another balance range. Range rotation, look to sell the high because obviously we have a bearish bias, right? And ideally what you want is you want them to try to go higher, fail to get to 91 half, so we can sell this puppy right back down. That will be the sweet spot here. Again, just like on crude, if they fail to rotate lower to 75 half, they're going to try to run it higher. The ideal scenario for the sellers is going to be if they cannot get to 91 half, give them a couple shots, and then it will tumble back down. How far will it go? We've got targets back at 75 half, and then that pendulum swings all the way back down. They try once, try twice. We sell back to 75 half, back to 70, right to 67 half, and so on and so forth. Remember, stick to the bearish bias. Even though we have a trading range right now, we definitely have the edge to the bears here at this time. Let it go up, let the buyers fail, and bring it right back down. Now you know the plan for the S&P. A lot of the same stuff here. The euro's coming up last. The euro's the one that gives you a curveball here right now. Gold is bearish. We get a strong bear channel and a trading range with a bearish bias this evening, which tells us to wait for the bulls to try and push price higher and sell into their failure tomorrow. This is very similar to crude oil. Very similar to the S&P. The bear channel confirms a direction for us. The trading range tells us to expect rotation and to look for failures if and when these buyers try to send this price higher. Two big clues on this chart right now. First of all is the bearish channel. You can see that bear channel acting very well behaved, rotating from the high down to the low, back into the high. We are definitely looking for selling opportunities right now off the high of that channel, but in comes your second clue, which I see as being the most important clue. We're currently in balance, rotating from high to low, back to high. It's going to try to go lower, and this again is that classic scenario that we've been describing so far. It's going to try to get to 1050.2. If it can't get to 1050.2, where is it likely to go? It's likely for the pendulum to swing. Most importantly, the best way to describe it is the sellers will be too weak, the buyers will smell that weakness, and they're going to make a run, pendulum swings, to try to get into the next balance range. 1062.6 is going to be the target for the buyers if they can't get to 50.2. If they can successfully get to 60.2, then we know we're going to be balanced inside of a new range, and the rotation scheme continues. What happens if they fail? Here's the nice juicy sell, right? If they can't get price up to that 62.6, if they fail to get to 62.6, the sellers now will smell the weakness, and it will collapse back down to 50.2, but it will most likely pendulum swings even further, hotkey's not working, down to that 1044.0. So remember, guys, when you're talking about range rotation, we go from high to low, low to high, high to low, low to high. If they can't get it down to that low, it'll snap back and try to go up to that next range rotation. The exact opposite is true. The same thing is true to the opposite side. Right? If we're trying to rotate higher and they can't get the job done going higher, it's going to try and make a run for the next range expansion. We then use our directional bias to decide what direction we want to participate in. As you can imagine, I'm going to teach you all this good stuff as a student here at School of Trade. Ranges are really easy if you know how to use that two-try rule. And speaking of trading ranges, we have this waiting for us on the euro tomorrow. The euro is definitely looking a little bit punch-drunk right now. Looking confused. Both sides took turns today ahead of the highly anticipated ECB announcement tomorrow. So we're going to trade this like a range. This is one of those examples where, when in doubt, call it a range and look to fade all the breakouts. That tells us that we're looking for rotation tomorrow, and our plan will be to stay away from the news early tomorrow morning and then try to find some decent price action after that big dramatic news report comes out tomorrow. The trading range and the expansions above and below will play key roles in tomorrow's session, and we're looking to fade all the breakouts. So here's what we see right now in the euro. This, again, is a very interesting scenario we're seeing right now. Price comes tumbling down here earlier this morning. We got the ADP news candle here at 8:30. Now, when I see that big wick on that candlestick, that tells me that this market tried to go higher, and that high was heavily defended. Think of all the sellers that came out and defended that candlestick. Look at the size of that candle, right? That candle is a huge news candle. So get these levels in there. There we go. Make sure it's all in there for you. Perfect. Okay. So euro pushes lower here. The news comes out, this huge news candle. Again, at one point, this was a big green candle, right? That's how that wick is made. And then it collapsed all the way back down. So we can assume that sellers defended this area. You can also assume that there are a lot of stop losses hanging out up there. You can also assume that if it goes back up again, it's going to be defended once again by the same people who got short the first time around. Now that we have the understanding of what that news candle tells us, again, that big wick tells me they sent it higher, but it was aggressively defended at that highs. We then see exactly what happened next. We have a bearish spike in channel. The sellers completely took control, but then for whatever reason walked away from it. And even crazier, it goes into a bull spike in channel afterwards. It's not just a bull channel, it's a bull spike in channel. So the sellers were aggressively defending it, but the buyers took it right back. Now, this would normally be confusing if we didn't know that tomorrow morning was a big, monstrous news event at 8:30 a.m. Eastern Time. So what's a trader to do? Well, first of all, we talked about this earlier. Be very careful tomorrow ahead of that 8:30 news and really 15, 20 minutes afterwards, because Draghi's going to take the microphone. He'll have his press conference, and then you're still going to see some reaction to it, usually up until about 9 o'clock. So really between now and tomorrow morning, 8:45, 9 o'clock in the morning, you really got to be careful if you're trading the euro or the gold, because you're going to see these markets react heavily, very violently to tomorrow's ECB announcement. So assuming we get through that tomorrow morning, now we trade this like a trading range. And now, because you guys are experts on range rotation, think about how this will play out. So we go up, we're expecting to test the high, and then we're expecting to rotate back down. Take this trading range, expand it higher, expand it lower. Now wait patiently for the 2-try rule. Price tries to break out, they'll try twice to get it to go higher. If it successfully gets to 0696, then we have a new trading range, buy low, sell high. What happens if they can't successfully get it? That's where the fun starts. We watch patiently. If they can't successfully get it up to that 0696, where's it going? It's collapsing back down into that range. Profit targets at 0630, profit targets at 0564. But wait, remember, the pendulum just swung all the way up, and now it's going to want to go all the way back down. The wise sellers are going to be holding on to trades all the way down to 0498. So scenario 1, we break out. We are successful within 2 attempts to get up to 0696, and that takes us into another trading range, right? Buy low, sell highs, buy low, sell highs, and use the same technique. Scenario 2, we go up, try once, try twice, we fail. Where are we going? Collapsing back down in, and most likely target on the way down, right? The pendulum will swing. It'll swing all the way back in the opposite direction. Scenario 3, we move down to the low of the range. We'll then look for buying opportunities because of range rotation. At the same time, if they try to go lower, I'll give them 2 tries to get to 0498. If they can get to the 0498, yeah, see, now you're an expert at this. Now we go into another balance area. If they can't get to 0498, 1 try, give them 2 tries. If they can't get the job done, where are they going? Yes, the pendulum swings. We go back up, 0564, 0630, 0696. And guys, with the volatility we're expecting around tomorrow's news event, we could see both of these scenarios happen, right? We really could. Now you know the plan for tomorrow. Now you're an expert on range rotation. Come out and join me tomorrow morning in our trade room, and we'll do it all together in real time. You know the plan on the euro. Careful on the euro. Careful on gold around the ECB announcement tomorrow. All bets are off when that volatility kicks up. Wait for after 9 o'clock-ish, right? 8:50, 9 o'clock, 9:15. Let it calm down, and then execute the plan. On the gold, bearish bias. I'm looking for buyers to fail on the way up to sell it back down. On the S&P, again, we talked about this trading range. Buy low, sell high while it rotates inside the range. We have a bearish bias. I'll choose to be a seller at the highs. And again, waiting for buyers to try, fail, and sell it back down. Last but not least, on the crude oil, crude has multiple reasons why we should wait for a correction. Waiting patiently for opportunities to sell the high of the channel, to sell the spiking channel, and of course, don't forget that range rotation target once, twice. If they fail to get to 40.97, look out below. Guys and gals, thank you so much for being a part of the newsletter here this week. Hope you guys and gals are learning more. Hope you're earning more with me because of it. Don't forget, check out the free trial here at schooloftrade.com. And while you're here, don't forget, check out our 3 levels of membership. We have beginner, intermediate, and advanced levels of membership. That way everybody has a home here at School of Trade. Whether you're a brand new trader that needs to lay a good foundation of knowledge and skill sets, or you're an experienced trader that's still trying to get that combination code to work and finally get those consistent profits that you've been working so hard for. Guys, don't forget, we've always got someone standing by 24/7, 365 to give you guys a hand. Join the trial. Come out and join me tomorrow morning, either as a guest or as an advanced member. And guys and gals, what a great week we've had so far. We're going to do it again tomorrow. Same time, same place. Don't forget, send me feedback. I'm JJ at School of Trade. Give me a thumbs up or a thumbs down on the YouTube video. I always love getting your great feedback, guys. Be well out there. Be nice to each other. Be careful tomorrow morning. And I'll see you back next time. Adios, amigos. Bye-bye for now.